Hey everyone, welcome back to MarketMindAU. It's October 21st, 2025, and gold and silver just had one of their biggest one-day drops in years. Gold fell more than 6%, silver tumbled nearly 8%, and the headlines are screaming crash. But what's really going on? And why this might be a gift for patient long-term investors? Quick disclaimer, this video is not financial advice. Today's sharp decline came right after gold hit an all-time record above $4,300 per ounce. Whenever prices rise that fast, markets get overheated. Analysts call it profit-taking, big investors cashing out to lock profits. At the same time, the US dollar surged, making gold and silver more expensive for overseas buyers. And finally, some of the fear premium faded after new comments on US-China trade tensions suggested tariffs were not sustainable. So the safe haven demand that pushed metals up for months suddenly cooled off. One profit-taking after a parabolic run. Gold and silver were technically overbought. $2 strength. As the dollar index rebounded near 98.5, it pressured commodities. 3. Easing inflation and geopolitical fear. When panic fades, traders move back to riskier assets. 4. Short-term algorithmic trading. Once stop-loss levels broke, automatic selling accelerated the slide. This combination created the biggest single-day sell-off since 2013. But notice, nothing here destroys gold's long-term story. Even after today's drop, gold is still up over 40% year-to-date, and silver remains in a multi-year uptrend. Central banks, especially in Asia, continue to buy record amounts of physical gold. Industrial demand for silver from solar, EVs, and electronics remains robust. So what looks like a crash on the chart might simply be a healthy correction in a long-term bull market. Think of it this way. If you liked gold at $4,300, you should love it more at a discount. Smart investors are patient. They wait for fear to create value. Don't try to time the exact bottom. That's a trader's trap. Instead, consider dollar cost averaging into positions. Add gradually on red days, rather than all at once. If your horizon is 5 to 10 years, today's volatility is noise. Long-term, gold and silver remain anchors against inflation, currency risk, and uncertainty. Keep an eye on US interest rate decisions, the dollar index, DXY, and central bank buying data. Those three metrics will signal whether this pullback is temporary or deeper. Big players use panic as opportunity. Retail investors often sell fear. Institutions quietly buy value. So instead of chasing yesterday's highs, focus on positioning for tomorrow's recovery. Patience is what separates traders from wealth builders. So yes, October 21st, 2025 will go down as one of gold and silver's ugliest days this year. But in the bigger picture, it's less of a crash and more of a clearance sale. Stay informed, stay disciplined, and always remember, this is not financial advice. If you're planning to buy the dip, comment below and let me know your strategy. Thanks for watching MarketMindAU. Subscribe for more real-time investing insights.